Hello, good morning everybody. Benjamin here, your financials and banking analyst. So today for the webinar will be me, myself, Benjamin, as well as Kenneth doing some TA outlook for you guys. So first up for today's presentation, I'll be starting off with a results update on SGX, and then subsequently will be some other bringing you through some things that are much more interesting today. Okay, I promise that. So today, first off, the SGX, we reported their results last week for 3Q14. So net profit came about 76 mil, total revenues 166 mil. So the results are slightly improved, all right, and despite a more challenging quarter. Right, so last week when I made my presentation, said that the SDAV and DDAV has only recovered slightly this quarter. So we didn't expect the total revenue to surprise. So as expected, the total revenue is only up 1% quarter on quarter. So net profit similarly up 1% quarter on quarter, but things that the year-on-year comparison is now 22%. Overall, it's still beat our expectations because the OPEX that's been incurred is slightly lower than expected. So management has revised their full year guidance of OPEX downwards by about 10 to 15 million. So because of that, we revised our EPS up by about 2% for estimates for FY14. So from 30 cents to 31 cents. Right, so medium-term wise, derivatives continue to be a key driver for SGX growth, and catalysts will be re-rating catalysts will be a sustained pickup in weak market volumes currently, more IPOs, and of course successful takeoff of new derivatives products that's being launched. Okay, so with the lower share price now, the dividend yield is pretty attractive at about 4.2%. Our cost still stands at neutral, not changed. Target price is rise slightly upwards to $7.04. So I hand over now to Kenneth to bring you through.
Hey, good morning everyone. It's a nice Monday. Glad you're here with us. Just quickly go through just the outlook on the US market and a bit of the Singapore market, just to give an update. Just want to remind you guys, sorry for the formatting. I lost a bit of formatting here. But basically, for the complete thesis and background for what I'm going to say, please refer to our archive webinar, which you can find in the Uni Phillips education programs, etc., etc. It's entitled Singapore Macro, technical analysis dated February 10th. So right now, I'm just going to give an update based on the guidance I gave on February 10th and before that. Okay, so this slide might be familiar. I've had this slide basically since February, and the guidance has been actually since December. I won't go through all of these with you, obviously, but I just show you this so you know that these are the things I talked about in February. Okay, so just to recap, I mentioned back then probably US market is still in a bull market, and yes, that's true. I did say that the January barometer confirmed the weak year thesis, so that means I'm looking for weakness in coming between May to August, but I'm going to be monitoring the market to see whether this is really going to happen, right? No guarantees. So we already had our early in the year correction, which we guided. Okay, so now we're looking for the May-August one. And finally, the investment action since December actually was, or February, was to have a sideways trading mentality until the middle of the year. We can prepare for a bullish move later in the year after correction in the US market. The STI should be affected if there's a long weakness in the US market, but to a lesser extent because of relative better valuations. And I did say that since beginning of April, the STI has a chance to cycle up until the meaningful correction in S&P starts due to relative valuations. And of course, if you've been keeping up, since beginning of April till now, the Singapore market was indeed cycling up. So we've been correct on this. Okay, just a slide that was done in earlier this year, January 11th, that showed you my guidance for this year. Okay. All right. So just to recap very quickly, I will not be going through all of these slides due to time. You can see them at your own time, but this is just for your reference. So anyway, the seasonal patterns that we're looking at will be for this recent cycle, 2010 to 2014, and this just shows that the probability of a weak May to July period is high. Okay, if you have a weak January. Okay, this is just what this slide shows you. Sector rotation wise is for your reference. Just to recap that as of now, materials and tech is basically in the lead. This is the sector rotation for the last 12 quarters, so this is a very long time period. This is almost one cycle, okay? So that means in the next quarter or two, we might see materials actually start leading. Okay, energy is still improving but not leading yet. This tells me that we are probably still in mid bull to late bull in terms of where we are on the investment cycle. Okay, quick short-term outlook. All right, just like to say that okay, this is the guidance that I gave back in 5th of April. I said that even though we noticed that price has been increasing, most technical analysts would just tell you that, hey, look, it's a long-term trend. The trend is still up. The longer the trend, the better it is. But for me, I'm a bit, I noticed that there was weakness building up in the price itself. Okay, based on some proprietary indicators and based on my thesis, and I mentioned this all back in 5th of April. So of course, since then we've had a weak candle here, followed by a quick correction down, and here we are. This particular chart you see here, just note, is on 24th April. This is actually on Thursday. I did this slide on Thursday just to let you see what I actually wrote and guided on Thursday. So Thursday I mentioned basically the same things, and I said that the breadth indicators were not improving despite, or rather not improving as much as I hoped it to be, despite this move up over here. Okay, and so based on what I see, it is still reasonable to expect weakness in May, August. Okay, and I said that there was still weakness, and of course, on Friday night, the Dow Jones had dropped about 150 points. I can't remember exactly how much it dropped, but 150 points. I just want to let you know that this slide was done before the drop, which I said there was still weakness going on. Oh yeah, so this is my guidance for the 25th. So basically, I said, caution, unless the breadth indicator shows significant improvement, I expect weakness over here at this point over here. This is the daily chart of the S&P. Yep. So even though price has gone up, the breadth indicators have not recovered in price. As you can see here, none of them have recovered, even though price has moved up here. That's why I thought that this move here was actually a weak move up, and I expected to cycle down again. And that's basically what happened. Okay, for SG market, just want to note this was from February 10. I said this was a big support zone over here. And of course, since then, we know that price has cycled up since then. Okay, I mentioned that price can cycle up as long as the US market does not go into a long correction period. That's where we are now. So now, basically, we are negotiating this key resistance over here. I will say it is possible for the STI to eventually penetrate this level, especially if the US has not started its correction period as yet. So now we have to monitor whether the Singapore market can actually break this big resistance zone over here, and that's where we are. So a successful break of this zone is bullish, and it will most likely challenge the 6-month high if this is a successful break. But we do have to see if it breaks out successfully. Okay, that's the update for the technical analysis. Just like to do a quick advertisement that so maybe in the 4th quarter, right, we might be holding a series of classes for TA. I will not be just going through TA basics because you can get that almost anywhere, but essentially I'll be giving some what I call value-added stuff that you can add on top of TA basics to really increase your chance of gains or to minimize your losses. Essentially, I'll be doing a few topics, and these will be a few of them. Okay. It'll be done piecemeal. You can go for probably one or all of them, but when you go through the whole course, it's meant to basically answer one question, and the question is number 6. When you go, so this whole course is geared so that we can help to give you the tools to see how you can detect tops and bottoms of stock market cycles. This will be the main focus of it, with real case studies. Okay. Estimated costs will be still to be decided, but it'll most likely be between $40 to $60 per teaching hour. So anyway, we will only launch this if we get if you have enough demand or critical mass of attendees. So if you are just interested to getting an update when this course is going to be done, if you're potentially interested, then just send an email to researchphilip@gmail.com. Okay. So once again, if you are interested, just send us a word at researchphilip@gmail.com. Okay. All right. Thanks, guys. Now we'll send you on to Ben, who's got a very sparkling presentation for you. I guarantee.
Thanks, Kenneth. Okay, it's Benjamin here, back again. So today I promised the presentation to be interesting as well as exciting. So today, last Friday, we initiated our coverage on Sarine Technologies. Okay, so today this is a presentation to share with you on this company. So first up, we look at the price chart. It's more than 100% return over the last 1 year. Current market cap is close to 1B and it's trading about 32 times PE. Okay, so first up, just a brain teaser. Right, this is actually a rough piece of diamond. Okay, so for a rough piece of diamond to a polished piece of diamond, right? So you can guess that Sarine is involved in the diamond industry. Right, so the key question today is how Sarine, what kind of role does Sarine play in transforming a rough piece of diamond to a polished piece of diamond? Right, so something on the company background, right? It's a technology-based company. It's a global leader with unique and proprietary technology. So the technology is very much designed and applied to the diamond industry, specifically the manufacturing industry. So what their technology does is to help to do advanced evaluation, planning, cutting, polishing, as well as grading, right, for the diamond and manufacturing, production and manufacturing process. So the company itself is headquartered in Israel, established since 1988, and it's listed on the main board in 2005. So currently it's still headquartered in Israel. So they provide their products provide solutions for every stage, all right, of the diamond manufacturing process, and the solutions help their customers to increase profit margins at every stage of the production process, right, between the rough diamond to polished diamonds. So currently, in terms of the planning and manufacturing equipment market, they take up about 75% market share, right? Next up, to better understand Sarine, we have to understand the diamond industry itself, right? So let me bring you through on understanding the diamond industry. First up, if you look at the top chart here, right, this is a very detailed chart on how the diamond transforms from a rough diamond to a polished diamond. So at the beginning part will definitely be the mining and extraction and production process. So this is where the diamonds are mined, transformed into rough diamonds. All right. So from here, the rough diamonds are sold to the cutting and polishing, which is the diamond manufacturers. So after it's cut and polished, right, it's sold off as polished diamonds to jewelry manufacturers. And this is after it's made in jewelry. All right, it's sold off to the retail sales, and it ends up, right, for the consumers as rings and jewelry and watches and whatsoever. All right, so if you look at this chart, it's a bit easier to understand. So follow me on this. So the upstream segment will be the exploration and mining. The sorting somewhat sits in between the upstream and midstream. So the midstream is the manufacturing process where diamonds are cut and polished. So this is where Sarine sits in the midstream. All right, and then the downstream will be the jewelry manufacturing as well as the retailing of the jewelry and diamonds. Okay, so some of the key players within the diamond industry in the miners portion, where the diamonds are mined and extracted, is occupied by a few key players like your DBS, taking about 45%. Alonso, which is Russian-based, is about 40 to 45%, and then you have Rio Tinto, BHP Billiton, and so on and so forth. So the mines are concentrated in Botswana and Africa, Russia, and some other places in a couple of small places in Australia and Canada. So for manufacturers, again, which is where Sarine sits, India produces about 80-90% of all diamonds, right, coming from the manufacturing part. And a couple of places like Botswana is coming up as manufacturing centers as well. Right, so in between you have your gem labs like your GIA, AGS, and so on and so forth, which help to set industry standards by grading the diamonds as an independent party. Then if your wholesalers, which are basically your rough diamond traders, as well as your polished diamond traders. So they sit in diamond exchanges around the world, like Antwerp in Belgium, Tel Aviv in Israel, US, and Hong Kong. So for retailers, it's a fragmented market where US takes about more than 40% of the global market. Hong Kong second by 25%. So this is where your key players like your local jewelry from Hong Kong, your Tiffany & Co, Cartier, and so on and so forth. Right, and of course the big retail chains in the US as well. So these are the key players in the diamond industry. So next up, the key question is, where does the value sit in for each segment of the value chain? So this is a rough measurement in terms of market size for each portion of the value chain. Right, so where Sarine sits in the middle segment for the rough to polished diamonds, you're looking at about 30 to 40 billion a year, right, in terms of market value. And then take note, for the retail portion, all right, and jewelry sales, all right, this is the downstream segment. It's actually the largest at about 70 odd billion in 2012. Okay, so take note of that. So next up, all right, so where does the value actually lie in the value chain, and where is it coming from? So if you look at this chart here, all right, from the point of time when the rough diamond is produced to becoming a polished diamond, the rough diamond to a polished diamond is worth about 8 times or more as much. If you look at the revenue chain, right, incremental value is added along the value chain, and the most amount of value is added at the end of the value chain, which is the downstream segment, right, which is the jewelry production and retail sales. Right, so remember this. Okay. So next up for the entire diamond market outlook. Okay, if you look at the demand versus supply, the demand came off a bit in between 2008 and 2009 period. This is where the global financial crisis was. So nobody wanted to buy diamonds, so the rough diamond demand came down, right? And then this study is actually done by Bain and Co. Right, so they do a very detailed diamond industry study every year. So they projected that that the rough diamond demand is going to grow at a CAGR of 5.1% over the next 10 years, mainly driven by the growing markets in India and China, right? Because the change in consumer preference for diamond jewelry will help to push up rough diamond demand in the long run. So versus the diamond supply, which is projected to grow at 1.9 to 2% CAGR over the next 10 years. Well, this is due to the fact that the diamond supplies are dwindling in all the mines, and there are no new significant mine discoveries in the last 10 to 15 years. Hence, when there's an imbalance between the supply and demand, right, mainly the demand will outstrip supply. Okay, this imbalance will help to drive up prices, long-term prices, right? So if we wait on a 10-year basis, the diamond market is indeed very favorable. So a bit more statistics. We look at the diamond production process, diamond production volume, right? So the peak was around 05 and 06. So you can see that the last few years, the production volumes are nowhere near the original peak levels. And then look at the price chart, right? So the red line here is the rough diamond index, followed by the black line, which is the polished diamond index. So 08 to 09, right? There was the big drop in the prices because of the global financial crisis. And then in between 2011 and 2012, rough diamond prices shot up, right, by a lot because De Beers was squeezing the global supply, right? So currently the price is a bit consolidating. And then definitely referring back to the previous slide, long-term wise, we expect the prices to go up. All right, so again, with the long-term prices set to go up for diamonds, it's a very favorable outlook on the industry itself. So next up, of course, after understanding the industry, we need to know where Sarine sits in the industry and what kind of role they actually play. So we refer back to this flow chart again. So again, for Sarine, it sits in the midstream, which is the manufacturing, where the diamonds are cut and polished. So if you follow this arrow chart, all right, so the rough diamond comes in here, it exits here as a polished diamond. All right, so these are the different processes that happen, right, to transform a rough diamond to a polished diamond. So if inclusion mapping, planning, cutting, right, then you do the final laser inscription. And then this portion, right, is the trade where the diamonds are sold off to jewelry manufacturers. Right, so there are many products that Sarine offers, okay, but I'll keep your attention to a couple of items. Right, so pay attention to this. So you see previously, okay, Sarine has been always in this portion, from the planning to the laser inscription. So this portion of all the products, we'll call it the traditional product offering that Sarine has. So we always call this a traditional segment. But in 2009, Sarine introduced the Galaxy family of systems. So this is used to do inclusion mapping, which I will elaborate a little bit more on later. Then followed by these two items, which is Sarine Light and Sarine Loop, right? So these are two new items that have been released this year. Okay, so again, let me follow me on this Galaxy system, traditional system, light and a loop. Okay, so this is the roadmap. So as I mentioned in the previous slide, prior to 2008, this was a traditional segment. 2009, the Galaxy was introduced. In 2012, the Sarine Light and Sarine Loop has been introduced. So to understand what kind of value that Sarine offers to its customers, we need to understand first what makes a diamond valuable. So previously, right, consistently across the industry, to value a diamond, you look at the 4 C's, which many of us are very familiar with. So your carat, your color, your cut, and your clarity. So just to take a bit more flavor on what actually makes a diamond so valuable. If you look at a comparison, alright, on holding the other 3 C's constant, i.e. your cut, clarity, and your color, look at a carat to carat comparison. Right, from a 0.5 carat diamond to a 5 carat diamond, a 10 times increase in the weight, right? It's not a 10 times increase in the price. In fact, it's a 17 times increase of the price, right? From 0.5 to 5. So it's an exponential increase with the increase in the size of a diamond. So it's not a linear type of price increase, all right? And if you look at this, holding the carat constant, you look at the other factors like your D, which is the color, and IF, meaning it's an intermediate flawless diamond, which is the clarity. So a diamond with yellow color, K, Si2, which is the inclusions, which is the flaws as well as the impurities of diamond are visible to the naked eye, versus a D colorless diamond, internally flawless diamonds, carat for carat is worth 6 times as much if you look at this. So therefore, if I can increase my carat size and improve, right, the quality of my diamond, right, diamond is worth much more. Right. So to examine the players in the market, if you look at the cutting and polishing, which is the manufacturing segment which Sarine sits in, the operating margins are very thin, operating about 2 to 5%. So Sarine's role is to help these manufacturers improve their profit margins. And how so? So what they do is to help their customers maximize, squeeze every drop of yield out of every rough diamond that goes through them. If you look at this very interesting picture over here, this is actually a snapshot of the traditional segment, which they help to plan how to cut a diamond. So basically input whatever kind of specifications or needs that you want into the system. It helps you to plan a rough piece of diamond, how to cut it, right, to maximize the use so there's as minimal wastage as possible. And if you look at this picture here, this is from the Galaxy system, which does the inclusion mapping, which affects your clarity. Right, so it helps to map out all the different impurities in the diamond, so that it feeds back here, and it helps you to cut the diamond, plan how to cut the diamond. So again, to maximize the yield out of every diamond. Right, so for every piece of rough diamond I buy, okay, assuming the price is constant, if I can increase my top line, increase the revenue that I get out of every diamond more, right, so my operating margins will be improved from there. So with such thin operating margins at 2 to 5%, a 1% increase is very significant. So that's what kind of value that Sarine provides to its clients. Right, so we examine a little bit more on the Galaxy. Remember the Galaxy traditional equipment, Sarine Light and Sarine Loop. Right, so the Galaxy was introduced in 2009. This has been a game changer for both the industry as well as Sarine. Okay, so remember the photo before that where I showed you that the Galaxy helps to scan to map out all the inclusions. So prior to the introduction of this machine, right, inclusion mapping, right, which means to find all the impurities in a diamond, which affects the clarity, is done by the human eye. So you take a rough piece of diamond, you shave a few windows, literally shave the side of the diamond, and use a microscope, look in, and you pen out and map out where the inclusions you think are lying. So a lot of human factors involved, and it's very time consuming, taking up 1 to 2 days to map out the inclusions manually by hand, right? So after this machine, this technology came up, right, introduced in the market by Sarine. Okay, prior to that, there was no other machines that can do this, right? So currently, it's still a proprietary piece of technology. Only they hold a commercialized piece of technology like this. So you feed the diamond here, right? Put it in, pop it in, let it scan for 15 minutes, and the machine scans everything for you and tells you where each and every piece of up to a micron level of where the inclusion actually lies, right? So this has indeed been a game changer for the industry. We remove the human factor and automates everything and speeds up the process much more. Okay. So how has it changed Sarine? Prior to introduction of this machine, which is FY09, okay, Sarine is more of a capex type of one-off capital equipment sales to its customers. Right, so revenue will be more lumpy, right, which is the traditional segment which they sell off the capital goods. Okay, so when the global financial crisis hits and the manufacturers cut back their capex, that's when you see a hit on the gross profit. Right, and the gross profit margins for capex for their equipment sales is ranging from about 60 to 65%. Right, so with the introduction of this machine, right, the front end loading is much less because they charge the customers a small amount at the start to purchase the machine. But after that, with every scan of the diamond, I charge you per scan of the diamond. All right. So because of that, with every incremental machine that I sell, I'm increasing the recurring income from the machine on a yearly basis. And the margins from scanning these diamonds are extremely high. You're looking at about 90-95%. Right, so with the total mix, if every machine that I sell, my recurring revenue increases, it drives up my profit margin as well. Okay, so currently as of FY13, right, the gross profit margin stands at about 71%, extremely superior margins. Okay, so based on our forecast, okay, FY09, one trial machine was sent out. By the time it was FY13, 142 machines have been sold in total. So for the Galaxy family system, there's the Galaxy and the Solaris. Basically, do the same thing. They do inclusion mapping. But for Galaxy, you're scanning diamonds for 3 carats and above. Solaris, about 0.5 to 3 carats. So based on market measurement, all right, we estimate that the total market size, the maximum market capacity is about 300 Galaxies and 600 Solaris. Right, so again, as of last year, only 142 have been installed. So even if I add consistently 50 to 60 machines every year, after 5 years, the market is not even near its saturation point yet, i.e., there's still room for growth. So again, with every incremental machine that I add, it pushes up my recurring revenue and it drives up my gross profit margin as well. Right, but of course that is not enough. Right, so if we look at the red box, this is where Sarine used to sit, the manufacturing process. But remember the value chain. Prior to that, when I talk about the value chain, okay, so much of the value in the diamond supply chain is locked up downstream, right, in the jewelry manufacturing as well as the retail sales, the polished diamond market. So this is where we need to look towards for the next stage of growth. So how does Sarine do this? Right, Sarine has introduced 2 machines, the Sarine Light and the Sarine Loop, all right, to help to penetrate the polished diamond market. To give you a bit more flavor, the Sarine Light, okay, is a machine where you put the diamond in, you send a flash of light, then the machine components will help to mathematically measure the light return from a diamond. So it goes beyond your traditional 4Cs. It helps you to look at diamonds, the light performance, right, the fire, the scintillation, the sparkle from the diamond. Right, so this is used for the retailers, right, to measure a diamond beyond the 4Cs. Right, and then you look at here, this picture is a bit blur, okay, because this is the only photo we have of this product called the Sarine Loop currently. Alright, so this machine, alright, sorry for the Sarine Light. 1 or 2 machines have actually been sold. See, one of them is used by Saima in Japan, a top and high-end boutique polished diamond jewelry company, retailer. And then for the Sarine Loop, alright, it's used for B2B, business-to-business transaction. It will be used for the sale of polished diamonds between manufacturers to people who require the polished diamonds, i.e. your jewelry manufacturers. So traditionally, to buy a polished diamond, right, people have to travel to the various diamond exchanges around the world, go there physically, inspect the diamond, and then I negotiate and I buy the diamond from there. So I have to see the diamond physically. But with the introduction of the Sarine Loop, it's basically like a 3D camera. I put the diamond in, it photographs high resolution diamonds from every possible angle, right, and then I'm able to examine the diamond as if it was the real thing, right? It can generate very extremely high resolution photos, which yesterday they have announced last night, right, that the Sarine Loop pilot test has been very, very successful, right? So they're looking to launch this in the later part of this year. So the feedback from this machine, right, was very, very positive. So just to share with you some of our projections, all right, Sarine Light and Sarine Loop. So for the loop, all right, for the business-to-business type of machine, so we estimate that the growth rate is much faster, right, for this machine, even though we've been pretty conservative in our estimates, right, over the next 5 years. Because why so? Because for the loop, right, the customer base will be the existing manufacturers, which they already have quite a bit of a critical mass on. So it will not be too hard for them to gain traction in this machine. But for Light, it's looking to penetrate into a new market, the polished diamond market. Right, so this one, we expect the takeoff to be a little bit more slow, right, but we'll continue to monitor this closely. But to give you a bit of a flavor how the loop is actually like, right, so these are 2 links here. Okay, basically these are 2 diamonds that have been scanned by Sarine using the loop. All right, and these 2 diamonds are exactly the same when it's graded by your GIA. Okay, so the difference is one diamond is in terms of clarity, it's a VS1, okay, which means it's extremely good diamond in terms of clarity measurement. Right, to the naked eye, it's not visible, the inclusion. And then for this, it's a VVS1, which is near almost internally flawless, i.e. even if I magnify 10 times, I can't see any imperfections or inclusions inside. So just a demo to show you how the Sarine loop actually looks like. Hang on, sorry. Okay. Yeah, so now we can see this. So basically, it does a 3D photograph, and you can rotate the diamond to whichever view that you want to. So let me demo to you. So you can do a 3D movement, examine the diamond for everywhere. So remember that I say it's a VS1 diamond, alright? So if you can see here, there are a couple of inclusions here. So to take an even closer look, if I magnify 10 times, this is actually what you can see from the Sarine loop, alright? So going okay, so going back to here again, this is the second diamond, right? If you look at this diamond, no matter which area you view from, even if I magnify 10 times, I can't see hardly any inclusions here. Okay, so this is a VVS1 diamond, right? So therefore, basically from what you can see from the product demo, okay, the Sarine loop allows the users to independently value a diamond without being physically there to inspect the diamond itself. So it holds tremendous potential right in this area. So again, the Sarine light and Sarine loop holds the potential, right, to drive Sarine into the next growth stage as they penetrate the new market. Okay, if we look at the financials wise, Sarine has a very, very clean balance sheet, right? They have a net cash position all the time. There's zero debt, zero borrowing, right? So after running you through the diamond industry, Sarine's value proposition, and some of the key products, let us summarize the key investment merits. So first up, Sarine has an almost monopolistic position in the rough diamond market, planning equipment market, right? It's about 75%. And their Galaxy systems, right, have revolutionized the rough diamond inclusion mapping industry, and currently they have no meaningful competitors for this. Second investment merit is that with every incremental Galaxy machine that I sell, it drives up my recurring income, and it will improve my gross profit margin, right? And then for the third one will be that if Sarine can break into the polished diamond markets using the Sarine light and Sarine loop, it holds tremendous growth potential. Remember the value chain, the rough diamond, the manufacturing diamond market versus, which is the midstream versus the downstream, right? The downstream segment is about twice the market size of the manufacturing segment of the diamond value chain. So if Sarine can break into that market, right, it holds the next growth, the next leg of growth for Sarine. And then the fourth one will be the positive long-term diamond industry outlook. Remember that the demand, right, is projected to outstrip supply, which will drive up the prices long-term, right, which forms a very favorable outlook for the diamond industry. But of course, we need to evaluate the key risks. Sarine is a company which develops its competitive edge on its proprietary technology. Right, so if there's competing technology that comes in, it forms a threat to eating up its current market share. Right, so for the Galaxy system, okay, again, it's a proprietary technology. No competitors have come close to developing something like that and being able to commercialize it. But from what we know, there's a Russian company called Octonos, right? They have came up with a similar technology that's they said to be able to perform the same function doing inclusion mapping. However, they have not been able to deliver consistent results with this, and therefore, because of that, they have not been able to commercialize this piece of technology, and apparently they have already abandoned plans to develop it more. Right. So the second one will be last year, an India company came up with 2 demo sets of a similar technology as well, but they've ran into a lot of technical problems when they were demonstrating this equipment. So again, this India company has not been able to commercialize this piece of inclusion mapping technology. So as Sarine gains more and more market share, right, so as more manufacturers adopt their technology, they will use Sarine's other planning equipment as well, which forms the traditional portion. So with all different cross-selling, right, the more Sarine gains traction, the harder it is for customers to switch over to other technology, right? So that's how Sarine mitigates this. Second portion is the tightening spread between the rough and polished diamonds. Okay, what I mean is that if the rough diamond prices goes up, and there's no corresponding increase in the polished diamond prices, right? This forms a very tight squeeze, right, on the margins of your diamond manufacturers, which is what happened in the 2011-2012 period. So if rough diamond prices go up, and there's no corresponding increase in the polished diamond prices, the manufacturers will scale back on their manufacturing. Alright, so if I scale back on my manufacturing, it affects Sarine as well. Okay, so how Sarine mitigates this is to move away currently, which I mentioned with Sarine Light and Sarine Loop, into the polished diamond market. Third will be the depreciating rupee. Since 80%, 90% of stones are coming from India, if the rupee depreciates, it's more expensive to manufacturers to purchase rough diamonds, and therefore they will scale back on the manufacturing as well. So similarly, the mitigating factor for these Kiwis will be penetrating the polished diamond market. And last up, the diamond market in general, together with luxury goods, are always affected by any global economic headwinds. All right, so when there's a global financial crisis, people don't want to buy jewelry. That's when manufacturers scale back on their production as well. Right, so the mitigating factor for this is that Sarine has moved more into a recurring income business model, which helps to form a base load, right, for the diamond scanning. So back to that, the Sarine Light and Sarine Loop will be built on a recurring revenue model as well, where customers will be charged on a per diamond scan basis. Last up will be geopolitical risk. Okay, the company itself, Sarine, is listed in Singapore, but its headquarters and manufacturing sits in Israel, right? And much of its business comes from India, so it faces geopolitical risk in that area. Right, so to our valuation, right, our target price is 320 converted at exchange rate 1.256. Right, so we did a DCF model to better appreciate the intrinsic value as well as the cash generating business of this company. So the target price is 320, which is at today's share price of about 282, represents about 14% upside, right, excluding dividend gains. So of course that is not enough, right? So we perform a scenario analysis. Okay, our base case is about 319, 320 actually, based on today's conversion, USD to Sing dollar conversion. Right, on our bull case, right, we projected that if Sarine gains very, very meaningful penetration into the polished diamond market, i.e. scanning about 3.5 million stones for each machine on a per annum basis, right, which is about 30 to 40% market penetration based on the 7 to 10 million stones that pass through the polished diamond market each year. We're looking at a bull case of more than $4 if Sarine is able to penetrate the polished diamond market, which we don't think is unattainable, right? Given that they have already gained so much traction in the the rough diamond market. Again, for the loop, we think this is the probability of this happening is very high, considering that most of the customer base are their already existing customers. All right, so again, we're looking at a bull case of about 30-40% market penetration for these two items. Our target price could be more than $4, which presents a more than 50 to 60% upside at today's share price. Right, so with that, I end on my presentation. Right, leave you with the key investment merits for Sarine summarized here, as well as the price charts. So please feel free to start asking us any questions that you'd like to. Thank you. Hi, the terminal value of Sarine is looking at a 5-year horizon discounted back by a terminal growth rate of 3%. Right, because we only project up to 5 years on that. So this is terminal value-wise. We do a comparison of consensus. Our estimates are actually more conservative than the rest, right? And currently P of 32, yes, it seems very high, but there's no comparisons currently for Sarine in terms of any similar companies. But the fact that the PE has shot up so high is because I think investors are starting to appreciate the fact that they have a higher proportion of recurring revenue. So with the recurring revenue in place, it definitely commands a higher valuation multiple, right?
Right, question here. Okay, Sarine sounds very interesting. Do you view it with higher potential compared to your top 5 picks? I think right now our top 5 picks, I think Sarine is not yet on our top 5 picks. I mean, yes, the price has run up. Of course, the valuation is high. Ben has guided though that it does demand a higher valuation due to recurring income, and of course, there's very strong and promising growth prospects. On that note, that's one of the reasons why we initiated on it, because I think Sarine has a lot of potential going forward, and what seems cheap now, what seems expensive now, could turn out to be rather cheap as earnings continue to grow and the new products take market share. Okay, so we decided that we have to at least cover the stock and to put it on our radar screens. If there are any pullbacks, I think it is definitely on the list for accumulates. Thanks.
I have a question on dividend. Okay, Sarine has been consistently returning cash to the shareholders. In 2010, they have a share buyback program, and they have been consistently paying out dividends. Last year's dividends was about 6 cents, 6 cents Sing dollars, 6 cents USD per share. All right, so that constitutes about 80% dividend payout for Sarine Technologies. So last year's yield was about close to 3%, but with the current share price a little bit low at 1.4%, right? But we are projecting on a 4 cent USD dividend per share for the next year going forward. So consistently, their dividend payout ratio, dividend policies are 2 US cents every 6 months. Right, of course, with the chance of giving any special interim dividend, which they have consistently been giving over the last 2 years as they're in a net cash position, and they always return cash back to the shareholders. All right.
Hi, this is Richard, analyst for transport. There's a question on comment on the SMRT share price. At the moment, SGX has queried SMRT, and SMRT has disclosed that there's no material development. So this spike in the price is not justified by fundamentals. We'll be reinitiating coverage on SMRT tomorrow. Please look at our report tomorrow.
Hi, a question here on which stocks are on the top 5. Yeah, we're currently redoing the list. We have been actually they are okay. Currently, it's Croesus Retail Trust, which is business trust of retail assets from Japan. Yields more than 8%. It's a very good dividend play, and we think it's pretty severely undervalued. Then we also have M1. M1 has been on the list for a long time, and we think that that M1 has actually a catalyst going forward, and that is that new contracts on 4G are going to be paying more than $10 more. And we have OUE, which we think is pretty undervalued, has a strong cash balance, and which we think that if deployed would probably be catalytic to the share price. We still have Bausted, which we see as severely undervalued due to the properties that are on the balance sheet that are possibly going to be REITed. Bausted recently said that they're exploring with other parties to achieve scale. They have about over 400 mil worth of properties on the balance sheet, and basically that's about 40% of the market cap. They also have a $50 million stake in Beijing Tongzhou, which is run by Perennial, and they have about 200 mil net cash. So when you less all that on an enterprise value basis, it's trading at maybe 5 times. We also have Penn United still on the top pick list. The share price has been doing pretty well. It's testing highs, and basically Singapore's construction outlook for the next 3 years is extremely robust. And they have also bought the neighboring port, which has increased the port size by about 60% capacity. The original port is running at 90% utilization, so they really need the extra space. It's pretty easy for economies of scale to be increased. The port is also in a duopoly situation. So yeah, it's got earnings growth ahead. We're currently running losses, but I think the losses will narrow by next year. So these are the top 5 right now. Thanks.
Hi, I'm actually the property analyst. Just now, the business trust that Joshua was sharing on, it was actually this counter called Croetia's Retail Trust, CROESUS, Croetia's Retail Trust. Basically, it's business trust holding 6 Japan retail assets. It functions very similar. It's in terms of business structure and how it functions is very similar to the REITs, because in its IPO documents, it actually holds itself to distributing at least 90% of its distributable income. And basically, it's operating 6 retail malls at this current moment. And yep, the rental yield at current price of 0.90 is about 8.13%, which is much higher than what current Singapore REITs and also what current Japanese REITs are able to command. So we feel that it is a very good yield play. And on top of that, in their upcoming June final year, full year report, there will actually be some revaluation gains even, because that would be the first time that their properties will be sent for actual the first end of first full year valuation. So we are expecting reval gains. We on top of that, currently we feel that the stock is undervalued and that there's very strong yield play. So yeah, this is just a short description of what we have presented. For additional information, you can read the report on Poems, or you can also look at last week's presentation as well.
Hi, Benjamin here. I have 2 questions on Sarine. First one is when Sarine Loop was first commercialized on the market. Okay, currently Sarine Loop has not been commercialized on the market yet. It will be commercialized at the end of this year, i.e. released for sales. But they've been running pilot tests, i.e. releasing these machines and letting their customers, which is the manufacturers, those Indian manufacturers, use it
all right, over the last half year. So yesterday they released an announcement on the loop, all right, and the feedback from these manufacturers was very positive, and they requested for a little bit more features and to it. So they're looking to fine tune it a bit more. But currently, they are, from what we understand, they are starting to charge on this machine to see what kind of outcome, right, you can provide. So we await more update from the management on the Sarine loop for this, right? But to reiterate, it seems to be taking off on a very positive note, right, for the Sarine loop. Alright, and for Sarine spent up more than 60% last 5 months. Is it the right time to chase it? Okay, based on our valuation, the 1 year for a target price of 320. So our forecast takes in about 50 to 60 incremental machines every year for the Galaxy family, as well as a single-digit growth rate for the existing traditional equipment sales business. Alright, so that's how we arrive at our 320 target price. In terms of the new product segment, which is the loop and the light, we have forecasted very low take-up rate, as this is a relatively new market segment that they are penetrating into. So we will await to see over the next 1 year how this progress actually moves from here. All right. So currently, our target price is still 320. All right, based on the current forecast, which again presents about 14 to 15% upside at today's price. Right. So that's the upside they're looking at for the next 1 year.
Hi, Lucas here again, property. There's a question on, is there any comments on the future of Sabana REIT going forward? Currently, okay, from a very industry, Sabana has about 22 properties and it's all in the industrial area. I would say that for a large part, I would say it's half-half between traditional industrial and the high-tech parks. I mean, serving some back office and serving some R&D space for companies. So, yeah, the outlook for this underlying real estate market for the industrial sector is not going to be really that rosy. I would say that it's stable. I don't see a lot of heavy weakness, but I do see some downside on that front. On top of that, Sabana, based on a year-on-year comparison, their occupancy is down slightly from about 92 to about 90%. So, on the future of Sabana REIT, I would say that more of the idea. I feel that in terms of distributable income, they'll be kind of stable. It dropped. I know it dropped a fair bit over the last year or so, but I look to Singapore remaining competitive on this front. What are the other alternatives if you do not want to locate your industrial operations in Singapore? Will actually be up north in Malaysia, which also present its own set of problems. And recent reports and recent business sentiment is that relocating over there or even relocating there in terms of productivity may not even make sense for some of the business. So having said that, I do believe that in terms of distributable income, it is going to be stable for Sabana REIT. But I would think that right now, the fact that it actually reported quite a volatile results over FY 2013, we should actually look at our portfolio occupancy before making the next commitment, because right now they are in the process of converting a few of their master lease property into multi-tenanted, and we are still unsure of how well they are able to manage occupancy if they were to not to self-manage all the various tenants within their own properties by themselves. So stable with a little bit of downside. That's my outlook for Sabana REIT at this point in time. All right. There's a question asking about Saizen REIT, saying that it also specialized in Japan. It's specialized in Japan residential. Any comment on this REIT? Firstly, before I even answer this question, I do need to point out that this Saizen REIT specialized in Japan residential. Not it is totally different as compared to Croatia's Retail Trust, which is specialized in Japan retail. So what's the outlook for Japan? What for Saizen REIT, which is focused on Japan residential? I think that if you look at the properties for Saizen REIT itself, it is focused on Japan residential and it's a collection of is a very huge collection of very small to the lower mid-sized residential, like maybe they have owning of very small, few tens of units kind of apartment, and it's spread out the whole of Japan. The good part of it is very well spread out throughout Japan. The downside to it is that, yeah, previously, I think in the last distribution, they actually hedged their distribution at quite a unfavorable rate. And therefore, although it's supposed, in terms of JPY, the yield is high, but when compared to SGD, the yield actually dropped quite a fair bit. So investors are kind of having a vote of no confidence on that front as of this point in time. Having said that, Sazen's distribution has been really, really stable in the JPY. As in, if you just look at the distributable income in terms of Japanese yen. So it is a very, very stable REIT. Having said that, the largest risk that it suffers from is very similar to Croatian Retail Trust, which is the JPY to SGD conversion. But having said that, we believe that this conversion rate is kind of stabilized because of there's really not much of a fundamental change in the Japan outlook and economics ever since December last year until as of now. So with that, I do not think that there'll be a very seismic change in this conversion rate from JPY to SGD. So yeah, it's stable for now.
Hey, this is Ken here, market analyst. Okay, let me see. All right, first question. How is the US market outlook? Will it be a bull or bear market? Simply put, right, we are still in a bull market. All right, we are still in bull market mode. However, we might be having a period of correction in a bull market. Okay, so I don't see prices collapsing. I stress the word collapsing. If you please refer to my thesis in February 10th. I suggested, based on historical pattern as well as historical conditions of the market itself, that any prolonged weakness should not drop by more than 20% because of the bullish nature of where we are right now. There are many reasons why the underlying fundamentals of the economy is conducive for a bull market. For example, we still have relatively good numbers, continued increasing corporate earnings in the US, and also having an inverted yield curve, right, providing ample liquidity for the market. History suggests that when you have these things going on, the corrections tend to be less than 20% if they happen. So yes, we are still in a bull market. Okay. So that being said, the next question is, given the US market falling soon, what advice would you give to investors? Now, if you look at my action page, I basically already had given my what I think is a good mentality to have. And the mentality to have is right here on action. Okay, that we should have a sideways trading mentality till mid-year. Okay, or at least until the correction's over. Okay, why sideways? Because prices aren't going to collapse. They might be weak for a couple of months, but even in weakness, right, prices can still go up and down. Okay, for example, if you look at the seasonality, that's why I posted the seasonality pattern, just for you to get a feel of it. Okay, if you notice the feel, May can be sharply down. Okay, but then January and July can actually, so May can be weak, June not so weak, July could actually be positive before August falls again, right? So even within this weakness period, it doesn't mean things will go straight down. And given that we are in a bull market, I suggest having a contrarian type of um, trading mentality, meaning when prices get really oversold, you might want to consider buying some because we are still in a bull market. But at the same time, since we are ripe for having a correction, if prices get really overbought, I would sell some. Now, how you go about executing this advice is really up to you and the type of trading mentality that you have. Some people are longer term investors, some are very, very short term. So it really depends on you. You know, the very short term traders who are very active looking at their positions can sell a whole lot more when things are overbought, and they can, and so on and so forth when they buy as well. Longer term holders might not choose to sell everything. They might just choose to sell a little bit, you know, just in case the the weakness period is not as long as we think it is. Okay, so I hope that answers your question.
Lucas, there's a question on how about IPC Prospect, which has a number of business hotels in Japan and China. I understand that the question most probably stems out from the fact that there are recent announcements saying that they actually recorded very strong FY13 results based on their property part of their business. Having said that, I strongly I do agree that yes, Japanese hotels and condominiums or service apartments for the matter is performing slightly better right now, and they do have some quite strong prospects because of their tourist place, because of the fact that their economy is doing well. So in terms of the way that the surveyors is going to value the hotel, is going to be very favorable for them. But having said that, I urge investors to actually look at the nature of the business. Look at look at the company as a whole. They reported very strong business based on a sector of, as in a reval gain of about, I think 10 or 11 million, and their overall net income is only about 46. So it's actually from a percentage point of view, this is actually very volatile. So in a year whereby if their valuation of the properties actually come down, then yeah, their net income will once again be very heavily impacted. And so based on the scale of the company and the over reliance of their business on just like one component or maybe 1.5 components of their business, this is just a bit too volatile and too risky for me to actually have a very strong or very favorable outlook on it. I do agree that FY13 was a good year for them, but I can't really say with much conviction that FY14 will also be a very good year for them. I don't think that the year-on-year increase is that sustainable in the long run. Yep, thank you.
Hi, this is a question that asks, how do I retrieve past webinar slides and obtain research reports if you are not a client of Philips yet? Okay, if you're not a client of Philips yet, you can't receive our research reports because you can log into our research reports if you are a Philips client and you have a POEMS account. Then you can actually log into our research reports. However, as a freebie, webinar slides, the past ones, are actually available, and you can actually find them right here. If you go to uniphilips.com, under Education Programs, Philips Security Research Seminar, sorry, can't see the seminar thing, right? If you go to these links, you actually see our past webinar presentations. I have a question on this is, if the US does go through a May to August weakness, will it affect high yield bond funds, given the correction are so short and not lengthy? Perhaps not affect at all high yield bonds. I mean, that's a very good observation. I mean, in the end, the secular trend of stocks and bonds, I mean, will still continue, because the correction is a matter of months, not years, and maybe only 2-3 months. However, based on the fact that we are still in a bull market, okay, that implies that it is possible that if stocks are selling off, the money has to go somewhere. And as long as you're not in a bear market, the money could even potentially go into bonds for those few months. So it might be even possible to be slightly positive for high yield bond funds during this weakness period. But note, this is only true, okay, in a market cycle where you are actually still in a bull market. When you are in a bear market, the opposite is true. That that is possible for both bonds and shares to both sell off at the same time. Okay, so based on where we are on the cycle itself, it's possible for bonds to be actually slightly positive during the correction time. If you want to understand more of the theory of cycles, right, I suggest you sign up for the class that I might be giving later this year. Okay, probably have a last question. Okay, let's give 2 questions. All right. Okay, 1 question. Okay, so do you not believe in the saying "sell in May and go away"? Okay, well, the thing was the "sell in May, go away" is that it's something that is true many times. It helps the trading mentality quite a few times, but as in technical analysis concerned, it's a probability. It doesn't happen all the time. That being said, because we are still in a bull market, right? I mean, there are some people who may not sell in May and go away. In fact, they may trade in and out of it. So once again, it's really up to you how you want to navigate yourself during this time. I've already said that the probability of May to August will most likely be not bullish, meaning it'll be weak. It'll probably be volatile month to month, and by the time the whole correction is over, I do not expect it to be more than 20% drop. It won't be more than that. Okay, and with that, I think we'll close today's webinar. Please come back next week for more. Okay, thank you very much and have a great week.